If you're an EU buyer confused about how VAT works on Qogita, no, you're not alone. The rules can differ depending on which country you're in and where your suppliers are located, which can be confusing. In this video, we will explain everything from domestic orders to international orders, how the reverse charge mechanism works, and a clever shopping preference trick that can help you improve your cash flow. So let's get into it. First, you must have a VAT number to register on Qogita. And secondly, all prices you see in Qogita's catalog are excluding VAT. Now, whether you pay VAT upfront depends on where your order is sourced from, but you'll know whether you owe any and how much at checkout. Because EU buyers fall into 3 different groups. Each has different VAT rules. Let's start with group 1. If you're a buyer from France, Italy, Spain, Belgium, Germany, Czech Republic, or Poland, you can order domestically from suppliers in your own country or internationally from suppliers in other EU countries. Your choice will impact how much VAT you're charged. If you order domestically, then you will be charged your local VAT at checkout. But if you order internationally, you will not be charged VAT at checkout. Now, what if you're ordering from multiple suppliers and there are a mix of domestic and international shipments? Then you will only be charged the VAT for the domestic supplier at checkout, and the international portion will be VAT free. Now, those of you in the Netherlands are in a unique spot. Because Qogita is a Dutch company with local VAT registration, you will always have to pay 21% Dutch VAT at checkout. This applies to all orders, whether they're from Dutch suppliers or international suppliers. But don't worry, you can still reclaim this VAT through your regular VAT returns, just like domestic VAT. Lastly, let's discuss those of you who aren't in a part of the previous groups. If you're in one of these countries, here's your situation. You can only order internationally from suppliers in other EU countries. You cannot source domestically due to tax rules. This means your orders will always be VAT free at checkout. Later on, your VAT returns, you'll handle it through the reverse charge mechanism. Now, there's something many buyers don't know about, especially those in Group 1 countries. In your Qogita account settings, there's a feature called shopping preferences. And if you want to avoid paying VAT upfront to improve your cash flow, you can remove your own country from your shopping preferences. This ensures you only see international suppliers, so your orders will always be sourced internationally with no VAT charged at checkout. The pros of this are a better cash flow. Since you don't have to pay VAT upfront, this can be significant for large orders. It also simplifies accounting since all your orders use the reverse charge mechanism. And it gives you access to more suppliers because you're not limited to just your domestic market. Now the cons are that you will have more administrative work because you need to properly report reverse charge transactions on every VAT return. Then there's also potential compliance risks. If you make errors on your VAT returns, tax authorities could ask you for extra explanations. And it's possible that international orders will take longer to ship than domestic ones. So the bottom line is that if you have a good accountant who handles your VAT returns properly, this can be a smart strategy. But if you're handling VAT yourself and aren't comfortable with reverse charge reporting, it might be safer to allow domestic orders and pay VAT upfront. So, what about the orders where you did pay VAT at checkout? You can reclaim this VAT through your regular VAT return with the local tax authority. Qogita provides detailed invoices showing exactly how much VAT you paid, and you can use these invoices as proof when you file your VAT return and claim the VAT back as input tax. As you see, it's the same process you use for any other business expense with VAT. By understanding these VAT rules, you can make informed decisions about domestic versus international ordering, optimize your cash flow, and stay compliant within EU VAT regulations. Thanks for watching.